All right, everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp, previously known as Tortoise Acquisition, when it was trading under the ticker symbol SHLL before the merger. And since the merger, this has been in bearish territory and in a bearish run. It's broken through bullish territory very few times, maybe about 3 to 4 times. And after that, it has actually been in a bearish trajectory. Now, before I jump into this chart, I want to say welcome to all my first-time viewers and investors. If you find value in this video and you like it, smash that like button for me to let me know you watch this video. And that's one of the simplest ways to say thank you. Same goes to all my subscribers. Smash that like button. That's the simplest and best way to say thank you and to explain to me in a click of a button that you enjoyed this video. And welcome back to all my subscribers. So here we are with Hyliion obviously getting further into bearish territory, hitting newer lows, and currently at 2011. One of the things that I'm noticing since I started this video, the S&P 500 index is actually slowly falling. I mean, when I first saw it about maybe 10 minutes ago, it was at a change negative of $98. And as I'm speaking, here's another dollar added, and several dollars are just being added to this negative change. So this is actually going down. It went from like a 2.8, 2.9% to a 3% change now. And overall market is important as well. I want to take a moment and explain that to everyone. In these times when the market is in a bearish trajectory, not just this chart, but the overall market, my best advice to all investors is pay close attention to what's going on, because that lets you know what could be affecting indirectly or directly these charts and the overall charts of the market. So be very careful in your investments, pay close attention to what's going on. And for those investors that see an opportunity or a discount, also do your due diligence and research before you jump in on certain stocks. So let's go ahead and move these to their new location so that you guys can pay close attention here with me on what's important for tomorrow. So the first thing is the 50-day moving average. 50-day moving average is 2104. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. So once they break through that, the bulls next goal is up here at 2169. They want to turn that into a support to pull away from the 50-day moving average, getting deeper into bullish territory. But right now, the bulls need to break through first before getting to any of these numbers, 2068. Once they break through 2068 and turn that into a support, they can start to break away from it, hit newer highs, reach new resistance levels, and break through their main goal, which is 2104, to turn that into a support and get back into bullish territory. Super important for the bulls. Now, keep in mind, this is just an indicator to all investors in which direction this is going and where the momentum is building up, and if the bulls are getting closer to their goal. But 2068 being broken through and turning to a support does not signify that the bulls have gained control. Now, on the other hand, we have what the bears want. Obviously, right now, the bears are a lot closer to this support, and this is the lowest point reached in this bearish run. And if this gets broken through, I want to emphasize to all investors, pay very close attention to how the stock is reacting and how quickly is it hitting newer lows. 1991 is our support. If that gets broken through, it will pull further away from the 50-day moving average in a downward direction, giving more leverage to the bears and actually working its way to newer lows and new support levels. So I emphasize to all investors, pay close attention to the behavior of this stock and how it's acting if it breaks through support, and how quickly is it hitting newer lows and new support levels. Again, I had talked about how the S&P 500 has negatively changed, and it has changed by almost $3 in the time frame since I spoke about it to where we're at now. And now it went from a 3.08 change of percentage to 3.2. I mean, the S&P 500 is really going to newer lows, and there's a lot of different ticker symbols going down with it. You have to pay close attention to that stuff, even when they're not directly in it, right? Like Hyliion is not in the S&P 500 index, but all those things directly and indirectly affect stocks. So one of the things I want to go ahead and emphasize that I know I mentioned it earlier, but one of the things I want to emphasize to all my investors and all my viewers is do your due diligence, do your research, pay very close attention to how the stocks are reacting and what's going on in the overall markets before you make decisions of investing. Now, if there are stocks that you see as an opportunity or a discount, that's great too. There's great opportunities to buy now. It's not just a red market and everything's going down and it's not coming back up. You have to do your due diligence. You have to play your plays very strategically. And I just want everyone to be aware of that and use the S&P 500 index and use the Dow and use the NASDAQ, depending on what it is that you're looking at, to have an idea of what's going on overall market and see how that indirectly or directly affects each individual ticker symbol and chart that you're looking at. Again, I want to emphasize to all investors, if 1991 is broken through, pay close attention to the behavior because this could be on its way down to newer lows and new support levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to hit that like button to let me know you watch this video. And it's the simplest way to tell me thank you, the content. And if you find this video helpful and informative for yourself, share this with your friends and community. And if you go ahead and feel encouraged or inclined to subscribe, click on that button, but don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.